Hello, welcome once again to the Seewing Yi from the Yi Real Estate Network, and welcome to another video presentation. And today I'm going to discuss the migration patterns nationwide, and we'll look at the trends. And at the end of this short video, I'm going to give you my personal take, my takeaway from this, and you as a potential primary home buyer or a real estate investor want to invest and want to uh, create your effort to go to these top markets in the country for the foreseeable future, this is one of the research and methodology that you need to look into. And of course, if you like my video, if you see a lot of value, please click the like button and also subscribe to my channel. And finally, you may also put your email into our database to become a free member of our real estate investment club so you can receive free weekly email newsletters to talk about practical investment opportunities to help you achieve your financial goals. So without further ado, let me share my screen, and I'm going to talk about the Redfin article just came out a few days ago, and the title is "A Record Share of Home Buyers Relocate, Driven by Moves Away from Expensive Coastal Areas." Just so you know, I know this is a very, very current research that was created by Redfin, but even before the pandemic, there has been epic migration patterns from certain locations in the U.S. to several specific markets. And of course, during the pandemic, this effort has really accelerated. And now, as Redfin and other sources will provide to you, we are seeing continued trends in migration into certain areas of the U.S. So this is a very, very important data, again, for you to make an informed decision about where you want to move to permanently, perhaps to live your life at a growing location, affordable areas, and for those people that want to retire in some of these areas, or for real estate investors that wish to buy investment properties in this fast-growing, affordable markets. So without further ado, let's dive into this short article by Redfin. And as you can see, some of you are very much aware that even before the pandemic, high mortgage rates, persistent inflation, and economic woes are making expensive parts of the country less attractive and relatively affordable places more popular. And just to reiterate, the migration from very high cost areas such as Los Angeles, San Francisco Bay Area, which I live for the past 30 something years, New York City and Connecticut area, Washington, D.C., very expensive, Boston, and all these areas, people are moving away from this high cost area. And based on the Redfin, a record 33.9% of Redfin.com users nationwide look to move from one metro to another in July and August, up 32% from the second quarter of last year and up 26% before the pandemic. If you could look at this graph right here, share of home buyers looking to relocate hits an all-time high. As you can see, right here, 2022, we're seeing trending up. Before the pandemic, March 2019, they were 25.2%. See this trending, which is very, very interesting. The trends are moving up and up. So I believe the trend will continue beyond 2022 for the foreseeable future, and for very good reasons. The share of relocating buyers out of all buyers is at a highest level since at least 2017, when Redfin started tracking migration data. So home buyers are leaving expensive coastal areas at higher rates than a year ago, okay? And of course, I already mentioned the major cities that people are moving from. And let's look at the top 10 metros by net outflow of users and their top destination. San Francisco Bay Area, of course, again, is the area that which I living at for the past several decades. A lot of people from San Francisco have really moved across the valley into Sacramento, about 100 miles away, and then secondarily Seattle. Some people, the misconception is a lot of people from Bay Area have gone to Austin, Texas, the Silicon Valley of the South. Well, that's not really true. They just move across the valley. But although there's a lot of people are still going to Austin from not just from California, but from many other areas of the country as well. Los Angeles, most people when they migrate to down to San Diego, which is a mere 70 miles away, which is San Diego is also very expensive. And yet a lot of people are very much aware that a lot of people from LA have moved to Las Vegas, which is up the road around 100 and something miles away across the state line into Las Vegas. So there's a very good destination. New York, which is New York City. A lot of people move locally to Philadelphia, which is my hometown, by the way. So Philadelphia is kind of growing, but a lot of the people, especially the upscale individuals, due to the advent of the remote working, many of them moved to Florida and Texas, mainly in Florida. People from the Northeast, Washington D.C. People move just across the river into Maryland. Okay, let me see what else. Chicago to Los Angeles. Yeah, I don't understand that. All right, so that's all I need to say on that graph. And the most important thing you need to know is that warm Sunbelt metros are most popular for relocating buyers. Obviously, because warm weather, which most people like, and of course affordable markets, very low cost still as we speak, and good business climate and a whole bunch of things. Miami, which is in Florida, South Florida, is a most popular migration destination as a matter of fact. In South Florida, but Miami is getting to be very, very expensive, and a lot of buyers from the Northeast and from out of the country in South America and a few other foreign countries are just migrating into Miami and South Florida. Sacramento again has been very popular for the Bay Area transit plans, and the rest of the destination. Or Las Vegas is a very popular migration, and Tampa, Florida, which has been well known. Florida consists of many in-migration growth. No surprise, still housing prices are still very affordable compared to the other part of the country. So Tampa and Cape Coral, Northport, which is part of the Cape Coral, Southwest Florida metro. And then Portland, Maine, I don't know, San Antonio, Texas, right? So Florida is always on the top of many research top 5, top 10, whatever. So it is really a #1 fastest growing state, Florida. Let me see what else I need to go over. You can see right here, the median price of certain areas are still fairly expensive. Sacramento, the median price is already $570,000. San Diego, $800,000, moving toward the 1 million mark. Very, very too expensive. Las Vegas still pretty cheap, around $416,000, and LA approaching $845K. So yeah, you all know what's going on. And let me see what else. Let me see, anything else I need to mention? I think that's what is this graph right here. Top 10 metros by net inflows of users and their top origins. No, this is not that relevant. These people moving back and forth between the locality. All right, so here it is. Here's my takeaway. Migration patterns, we all know pre-pandemic, most people are already slowly moving to the south and southeastern states because of the Sunbelt amenities. It has a very housing prices are very, very cheap pre-pandemic, and during the pandemic, a lot of these Sunbelt areas in Western region like Phoenix and Boise, Idaho, and Las Vegas has received a lot of migration of people, and they will continue to do so. But the hotspot, in my personal opinion, my takeaway from this article is that South and Southeast is the most desirable for home buyers and for real estate investors, especially for mom and pop real estate investors that want to buy investment properties in the Central Texas or in Alabama or in Georgia or in Florida. These are the South and Southeastern states are still affordable. You can investors can buy a property of very good new construction in certain parts of Florida for only like $250,000 to $300,000, and the rents are very, very high. So, and the homeowners, once again, even though there has been skyrocketing of prices in many areas in the country, especially in the South and Southeast, Texas, Florida, for example, South Carolina, North Carolina, Georgia, and Alabama, skyrocketing prices and what have you. But still, for the foreseeable future, because of the quality of living standards and the quality of life, business-friendly environment, and landlord-friendly state. So many investors are they are matching up the potential rent they can collect. So the investors the objective is to buy the least lowest price of home, right, and with the highest amount of rent. With the skyrocketing of rent going on, with most people cannot afford to buy a house these days, they have to rent. So risk investors are having great opportunity to buy this type of cash flow investment homes in the South and Southeast to take advantage of the epic renters nation, if you will. So many people are renting these days because they cannot afford to buy. The mortgage rate is at least 6% now, in case you have not heard. So that's what's going on, and just watch the migration pattern through the Redfin as I'm discussing with you today, and also look at their U-Haul, right? U-Haul, the website U-Haul, they also produce some updated information about a U-Haul migration from one state to the other. So that's another research methodology you can use. So at the end of the day, you want to buy a primary home for yourself and your family to live there for a certain place for a long term. And also, you as a real estate investor, you want to buy where other people are moving, when there are job growth, when there are population growth, when there are migration pattern from other part of the U.S. going into this low-cost, affordable markets. So that's very obvious, right? That's what you look for. You look for fast-growing area, affordable area. You could make money as an investor. You could make money as a homeowner. Just invest for the long term, and you'll be fine. So follow the migration pattern, follow the job growth, the population growth, and the affordability of the homes that you are targeting. And if you're an investor, match the rent. Right? Do your local research. Real estate is local, is not national. Find a specific market, a specific city, a specific region, a specific county, specific neighborhood. Target the neighborhood. Do your numbers. Invest where the numbers make sense, and work with a team of local turnkey providers, if you will, that can supply you with this type of low cost, high quality, good neighborhood homes where the rent you can collect from this investment homes are able to pay off all your debt service, and you can still achieve positive cash flow. All right, thank you so much for listening. And if you see the value of this presentation, please click the like button to increase my visibility on my YouTube channel, and subscribe to my channel. I produce weekly videos in all aspects of real estate. And also, last but not least, please just if you want to put down your email into my website database below, and you can become a free member of our real estate investment club. You can receive a weekly free real estate newsletters to become informed and motivated real estate investors to target specific areas to purchase your investment properties through our network. Thank you so much. This is Seewing Yi. Have a nice day. I will see you on the next video. Goodbye.